Director and is heading Technical Directorate of ICAI, to set out the tone of the VCM. Welcome, sir.
Thank you, Shivani. It is indeed a special privilege for me to address the members of ICAI and officials from various local government departments who are attending the virtual meeting today on local government taxation matters, status and compliances. That is being organized. This program is being organized by Committee on Government and Public Finance Management of ICAI under the theme of Azadi Ka Amrit Mahotsav. The second session of the same series will continue on 29th of July 2022 at the same time. Government is making sincere efforts to improve the government accounting and financial management in India. Accountancy profession is also committed to protect the public interest and enhancing transparency in the financial operations. Institute of Chartered Accountant of India, as a partner in nation building, is involved in ongoing accounting and financial management reforms in the country, in the private sector as well as in the government. ICAI has established Committee on Public and Government Financial Management, which primarily focus on capacity building on the finance officials of various tiers of government in India by various means such as workshop, e-training modules, etc. Apart from formulating accounting standards for local bodies, this is an initiative of ICAI to meet its social obligation by providing professional services of CAs beyond corporate sector and to public at large by being true to its role of being a partner in nation building. We at ICAI will continue to support government efficiency and transparency through our projects and technical assistance. The committee has taken several steps to increase its visibility, approach, and reach among government organs, be it central, state, or local self-government. The committee has extended a helping and advisory hand to all those who desired and expected it, especially in the areas of accounting reforms and compliance mechanism. To be readily available to all stakeholders, the committee unveiled its own portal, cpgfm.ici.org. Also, we have revised the certificate course on public finance and government accounting, which is now being noticed by Public Policy Matters and state government, having started including its criteria in assignment allocation. Apart from the above, on the recently concluded CA Day, the committee has also launched updated version of publication on commonly used terms in public finance and government accounting, covering modern, latest terminology used in the area of public finance and government accounting. This will help various stakeholders in reading the financial statement of the government in a better manner. The system of taxation is the backbone of nation's economy, which keeps revenue consistent and manage growth in the economy. The Government of India is authorized to levy taxes on individuals and organizations according to the Constitution. Local bodies are also liable to pay taxes. In today's VCM, we will focus on applicability of Income Tax Act and GST Act and its impact on local bodies and compliance requirement under these acts. Very special topic, actually, very interesting topic, I would say. Local body needs to also comply with various requirements of these acts, such as timely submission of various returns. Various local bodies, specifically provision of the Income Tax GST Act, will be dealt in today's session by our eminent speaker. Now, with all this background, I hand over the stage to very respected CA Sumita Reji, a very experienced professional from Kolkata, who will discuss about applicability of Income Tax Act, covering provisions of TDS and goods, GST, and impact those acts on local bodies. He will also throw light on the various taxation issues faced by the local bodies. I hope that all of you would benefit from today's deliberation. I request viewers to attend the second lecture of the series also, which is scheduled on 29th of July 2022 at 11 a.m. I once again wholeheartedly welcome all of you. All of you may ask questions on the window provided for this purpose through chat box. Wishing you all a very happy learning. Thank you very much. Over to you, Shivani.
Thank you very much, sir, for your inspiring words and throwing light on the theme of today's VCM. Now I would like to invite CA Sumita Bhare, an eminent speaker, who will be addressing us on today's topic. CA Sumitaba Ray is a seasoned professional with more than 22 years of post-qualification experience. He specializes in financial management, government accounting, and implementing computerized accounting systems and implementing financial and accounting reforms in government systems. He is presently working as an international fiduciary management specialist in Nepal for School Sector Development Program and as a team leader public finance management specialist international for strengthening municipal financial management system program of Narayanganj City Corporation in Bangladesh under ADB loan. Welcome, sir. Sir, you are not audible.
Yeah, sorry. Thank you, Mr. Gupta, sir, and thank you, Shivani, for the awards. Yes, I had been working in this sector since long, but before I share my presentation, I just want to add a note, add a rider, that I had been in serious practice until 2005-6. Thereafter, I switched my gears and switched my things to the urban local bodies. So like a seasoned practitioner who deals mostly with income tax and GST and service tax laws, so kindly note that I am no more a seasoned practitioner of income tax and GST, because my area of work has changed and I'm more into the local body taxations and other things. So though this subject is very interesting, I will only be sharing my working knowledge. But if you ask as a true professional whether I am an expert in income tax and GST, especially GST, because income tax we have learned in our education days when we are appearing for the examinations and in my practice ways. But GST is a very vast act. I mean, I don't know if anybody can say he is a master on this subject or not. It's very difficult. It's a very comprehensive act, and it's ever evolving. It's evolving every day. So many circulars come every day morning, so it's very difficult to keep a track. But I would try to highlight the details about the impacts that I have seen in my own eyes, where these things can come and where these things can help. So let me share the presentation and let me start the discussion straight away. Hope my presentation is visible to all. Shivani, it is visible?
Yes, sir. Yes, sir, it's visible.
Fine. So as already Mr. Gupta and Shivani have already mentioned, that this is the first session on the local government taxation matters. And today we will be mostly discussing about the Income Tax Act of 1961 and its impact on the local bodies. And second part will be the Goods and Service Tax of 2017 and its impact on the local bodies. Now, as I've already mentioned in the brief introduction, now both income tax and GST are very, very comprehensive laws of our country. And we chartered accountants are always fortunate that we do get an opportunity to learn the three most complicated laws of the country. That is income tax, the company law, and now it is previously in our education days, it was a service tax. Now it is the service tax and excise. Now it is a GST. So we chartered accountants are very fortunate in that way, because we do get to learn and then being taught and then being examined on these three laws very comprehensively. But as I've already told you, I had been in serious practice up to 2005-6, but later on I switched and changed over to the local bodies and government taxation matters and other things. So please don't consider to be me an expert in income tax and GST. So I would be throwing up all the issues that I have seen in my from my experience. So that's the rider that I would put. But definitely I will take questions and I will try to share your queries. Now, as Shivani and Namrata have already told me that I would try to wrap up the session in 1.5 hours time. That is 15 minutes before 1 o'clock, so that the last 15 minutes can be kept reserved for the questions and answers. So I would be requesting you to note down or put the questions in the chat box. and so that I will deal with them at one go when I complete the session, because in between resolution of answers, little I mean, I go out of the track. So just to help me out, I will try to take the questions in the last 15 or 20 minutes of the session. Okay, so let's go ahead with the technical part of the presentation. Now, as I always mention in all my presentation before the members and the respected officials of the local bodies. Now, as I understand, this VCM is being offered to a pan-India audience. So I would be keeping all my discussions into English. So if you have any queries, please put me in the English language only. So that would be easy for me to deliver the answers. Now, all opinions are mine, and definitely I have referred the books, referred the laws, etc. So I have tried to do the best due diligence to prepare the presentation. But all human makes error, so there can be some errors and omissions. So kindly excuse me for that. But if you want to rely on any of the information that is being shared today, kindly do a second due diligence of the facts, opinions, and findings. Now, the discussion outline, as already Gupta sir had told, and Shivani and all have structured it, we would be discussing the income tax of 1961 and the impact on local authorities. And then we'll be discussing on the goods and service tax 2017 and impact on local authorities. Now, though we will be going into the detail by what is the meaning of local authorities, but today that entire discussion about local authorities will be restricted to two institutions of the country, that is the Panchayati Raj institutions, whom we call PRIs, and the urban local bodies, which we call the municipalities or the ULBs. So the local authorities that would be discussing today, or will be focusing today rather, would be the PRIs, that is the village or the rural institutions, and the urban local bodies or the municipalities, that is the city institutions. Now, as you probably would be knowing that in India, we follow a three-tier governance structure, with the union government at the top. Then we have the state governments, and then we have the local governments. Now, though this is not a part of the discussion today, but just to tell you, the local governments are our primary focus of today, and the local governments of the rural side are called the Panchayati Raj institutions or PRIs in India, and the local governments of the cities or the urban side are called the urban local bodies or municipalities, which take care about the cities. Now, also one point I want to make a note of. Now, urban local bodies and Panchayati Raj institutions come under the list 2 of the 7th schedule of the Constitution. That means Panchayati Raj institutions and urban local bodies are the subjects of state matter. That means a state government had the authority to frame laws, to monitor, and to ensure the performance of these local bodies. Now, but Income Tax Act of 1961 and Goods and Service Tax of 2017 are basically global or the pan-India acts or legislations. Though every state have formulated their own Goods and Service Tax Act, but they're all same. So they all comply with the Goods and Service Tax, the Central Act. So basically, we will be discussing two central legislations that are impacting on state bodies. So here we have to be very careful about the taxation structure, the federal structure of when we'll be discussing this. So keep it in mind, just to have a say. So again, to start the process now, we would be focusing on the Panchayati Raj institutions and the municipalities of our country, and how they are being impacted by two central legislations of Income Tax Act 61 and the Goods and Service Tax of 2017. Now, first, the Income Tax Act of 61 and the local authorities. Now, here we would be discussing, or we would be dealing, or we will be rather deliberating on the legal structure first. And this legal structure and the legal points or the legal framework will throw us that how we deal with the things that is happening on a day-to-day life. Okay. Now those who are the members who are present here, now they are very much aware of the law and the legal framework of our acts and legislations. I don't want to go into very detailed about these things, but as I understand that there are certain government officials also present in today's presentation, that's why I have kept some of the provisions of the act in detail. Now, it may seem to be a repetition for the members, but it may sound fresh to some officials. So let's balance it out and understand that what we are trying to discuss. Now, when we were discussing any law, it is very important to understand the structure of the law and how it is impacting our daily life. Section 2(7), Section 2, subsection 7 of the Income Tax Act very clearly defines an assessee. Now, this is an important word or an important group of letters which defines or which is important to understand the Income Tax Act. Now, it's an assessee. And who is an assessee? He is a person, or means a person by whom any tax or any other sum of money is payable under this act. Now, this act means the Income Tax Act. That means an assessee will always be a person by whom any tax or any other sum of money is payable under this act. So if you are liable to pay any sum, now it's very clear, any sum, then you are an assessee. Now, therefore, every person in respect of whom any proceedings under this act has been taken for the assessment of his income, that means if the income tax authorities have started an assessment procedure also, you have not submitted any tax, you have not done anything, you are not a person till date, but the income tax department has started an assessment proceeding and they have claimed the money or they have demanded that money, then immediately you become an assessee. So whether you will be suffering any loss or you will be getting a refund or anything, if any assessment procedure starts, then automatically you become a person. Now, this is a very, very important word in the Income Tax Act, that is a person. So whenever you have to see the compatibility of the act, the applicability of the act, the legal proceedings of the legislation, the income tax legislation, please see what is the definition of a person and whether you are covered under that definition or not. Therefore, also the act very clearly says every person who is deemed to be an assessee, that means you are not an assessee in actual, but you are deemed to be an assessee, then you are also a person under the provision of this act. So every person also who is deemed to be an assessee, but in default under any provision, he is also a person. Therefore, the word person is a very, very wide and a vast, it has a wide gamut. So try to understand whether you qualify as a person or not. So that is very, very important to appreciate the contours of this Income Tax Act, because as I've told you, the Income Tax Act 1961 is a very, very complicated act. It's a very well drafted legislation, and we are still continuing with that legislation. Even there was a discussion that there will be a direct tax code at some point of time, but somehow the government of India had thought of continuing with the 1961 Act because it's a very well drafted and structured legislation. Now, come to the definition of a person. Who is a person? Please refer to Section 2, subsection 31 of the Income Tax Act, where the definition of person is given. It includes. That means the list is inclusive list. That means those who are in the list are all covered. Those who are not in the list, they are not covered. Now, I don't know who are not covered in the list. I have not seen anyone who are not covered in the list. An individual. So it covers everybody. Me, you, whoever. An individual. A Hindu undivided family, HUF. Now, there's a definition. What constitutes an HUF? I'm not going to the definition because that is not our area of focus today. So Hindu undivided family. A company. Obviously, a company which is registered under the Companies Act of 1956, read with Companies Act of 2013. So all company. Now it can be a single person company, it can be LLP, registered LLP, whichever covered under the Companies Act are company. A firm, that means a partnership firm. An association of persons or a body of individuals, whether incorporated or not. That means any AOP or BOI, usually we call it like that, AOP or BOI, whether incorporated or not. That means whether you are registered, incorporated or not, if it is an association of person, mainly it constitutes or it includes a trust, societies, etc. So any association of persons or BOI are covered under the definition of person. A local authority. Now here the definition, here it includes a local authority also. Now this section 2 subsection 31 doesn't define who is a local authority, but a local authority has been included. And every artificial judicial person not falling within any of the preceding subclauses. Now this is a residuary clause which includes everything. So every artificial judicial person not falling within any of the preceding subclauses are also included under the definition of person. So as I've said, the definition of person is very, very wide, very comprehensive, and it includes almost everyone in India. Now, for the purposes of this clause, remember, whether when you are discussing an AOP or a BOI or a local authority or any artificial judicial person, please don't confuse that whether these bodies or these persons are established or incorporated with the objective of deriving income, profits or gains. So objective of deriving income, profits and gains is not the priority or the preamble to include any body of individual authority, local authority or a judicial person. That means whether you are earning profit or not, that will not be the consideration of including these persons or these bodies under the definition of person. So you cannot say that I am not earning profit, I am not earning income or not deriving income, so why shall I be under the Income Tax Act? No, it's not so like that. It includes everyone. Now, so section 2 subsection 31 includes person, and for our discussion of today, a local authority is included in the definition of person. Now, straightway we come to the charging section. Section 1020, please mark this section. Section 1020 of the Income Tax Act exempts the income of a local authority. Now, as I've told you, the definition of local authority is not given under the definitive sections or as an explanation to 231, subsection 2, subsection 31. But straightway it comes, the law comes that section 1020 exempts the income of a local authority, which is chargeable under the head from income from house property. That means a local authority. Now, again, till now, I have not defined or we have not discussed who is a local authority. We are just understanding the two words, that is local authority. So local authority, if they are earning any income from house property. Now, under the Income Tax Act of 1961, who earns income from house property? Those who have let out their properties against receipt of a rent. That constitutes income from house property. Now, for a municipality or for a local body or for an authority or any body like this, if you have any property and if you have let it out to somebody against a rent. Now, property, house property obviously sometimes include land also. So if you have done that, then that income that you are earning, that is exempt from income tax. That means a local authority will not be charged tax for that, income tax for that. Similarly, if the local authority is earning any income or gain from capital gains. Now, under the Income Tax Act, what is a capital gain? If you have a property brought at some point of time of your life, Now, if you want to sell that property, now that property can be any movable property, it can be immovable property, it can be shares, it can be debentures, anything. Now, again, there's a very wide chapter or a very detailed chapter on capital gains taxation under the Income Tax Act. Now, if you are earning any gain from that sale, that means if you have bought a property, say in 2002, and you want to sell the property in 2022, so between these 20 years, if the property that you have brought at 100 rupees and you are selling it at rupees, say 200 rupees, if there is a gain in that purchase and sale, then that gain is taxable to tax. That gain is taxable or put to tax. Now, in the case of a local authority, this is not taxable. You are exempted from that taxation. Similarly, if a local authority is earning any income from other sources, now there can be many sources. Again, the other sources chapter is also very wide. A lot of definitions are there. So if you are earning any income from other sources, now immediately I can tell you a couple of examples. If the local authority has kept any free investments or parked any free money into some investments into a bank deposits, a fixed deposit, or you have purchased any other bonds or something where from you're earning income, so that income is not taxable in the case of a local authority. In addition, a local authority can also trade or business. In addition, a local authority can also trade or business. That means it can be it can be doing some business activity. For what? A local authority can do a trade or business, and for that, for supply of a commodity or service, that means what you are supposed to do under the law of your municipal corporation or the PRIs as defined or governed by the state government. If you are supposed to do some activities or provide any services or supply any goods, and if that goods or services is earning an income, then that earning of income is also exempted from tax. Now, please now note the variations. Now, if that service is provided within your own jurisdictional area, that means within your own municipal boundary or within your own panchayat boundary, then only this exemption stands. Please note, if you are providing a supply of a commodity or a service within your own jurisdictional area, then only this exemption stands. If you are providing any commodity or service outside your jurisdictional area, then you are liable to pay tax. Now, when we are discussing about service, there is another negative point here. It excludes water and electricity. That means the service excludes water and electricity. For water and electricity, it says, if you are supplying water or electricity within or outside your own jurisdictional area, then also it's exempt from tax. Therefore, if a municipality or a panchayat is supplying water to an area outside its jurisdictional area, then it's exempt from tax. And you're definitely collecting some revenue out of that. You're exempt from tax. But if you are providing some other services, like you are running a bus service or a transport service, and that bus is going beyond the municipal jurisdiction, then that service will become a revenue for you, and on that you will be chargeable to tax. The law is very, very clear here. Section 1020 very clearly says almost all income of the local authorities are exempt from tax, provided you provide the service within your own jurisdictional area, except electricity or water. If it is electricity or water, then you can also provide that outside your jurisdictional area, and that will still be exempted from tax. So please remember that if you are providing any services within your outside jurisdiction area, then that is liable for tax. Now, this is section 1020. Please remember, because this section allows you all the exemption from income tax. Now comes the explanation to section 1020. The explanation to section 1020 says, what is a local authority? Now, here the explanation comes. This explanation is not given under section 231 where the person had been defined. This is coming with the clause section 1020. Local authority means, number one, a panchayat as referred to in clause D of article 243 of the constitution. Now, please check the constitution carefully. Now, in every VCM, in every certificate course, I always request the participants and the audience, please refer the constitution sometimes, because that is the mother of our all legislations. Please do not disregard the constitution in any way. Please refer the constitution and the articles and the subclauses. That will give you a comprehensive idea about the law that we're discussing. So panchayat, it is defined or referred under clause article 243D, 243 subarticle D of the constitution. Now, I am not going into the constitution today because that is not our subject to the focus area. So please refer to the constitution and article 243 subarticle D. Municipality. Now, please note here the constitution doesn't define urban local bodies. Please note, urban local bodies have never been defined in our constitution. Our constitutions have always defined these bodies as municipality. The word that we have used now, urban local bodies or local body taxation, etc., these are variations that we have adopted in our colloquial languages. But if you go by the constitution, there are only two bodies. One is a municipality and second is a panchayat. So municipality has been referred under article 243P of the constitution. So please refer, because under the municipality, there are three categories of municipality: a municipal corporation, a municipality, and a Nagar Panchayat. Now, in my certificate courses, I detail out these definitions very, very deeply, but I'm not doing so here now. It also includes a municipal committee and a district board, which is legally entrusted by the government for the control or management of a municipal or a local fund. So if there is a municipal or a local fund, and if it has been entrusted by the government to form a municipal committee or a district board, then that is also a local authority. Also, a cantonment board. Now, as you all know, that army cantonments or defense cantonments are special zones or special areas who get the services from the cantonment boards. Now, that is outside the municipal jurisdictional areas. Now, cantonment areas are special areas which are under the specific cantonment boards, and they are governed by the Cantonments Act of 1924. Now, cantonment boards are defined under section 390. So cantonment board is also a local authority. So if a cantonment board is earning any income, that is also exempt under the Income Tax Act, right? Section 1020. Now, so this is the explanation or the inclusive definition of what is a local authority. So now you can understand that what we are discussing today is basically the local authorities, and under the local authorities, we are only concentrating on the panchayat and the municipality. So because as the institute, as a committee had suggested me that it should be the local bodies. So local bodies, I consider both panchayat and the municipality as the local bodies. So we are not discussing about the municipal committee and district board, and we are not discussing about the cantonment boards for the time being. Now, just to inform you, if the local authority is earning any income which is chargeable to tax, that means which is not exempted from tax, then the tax liability rate for the current assessment year is 30%. Now, I won't, or rather we cannot discuss that what would be the types of income that is chargeable to tax, because any municipality can earn any income. Now, whether that is chargeable to tax or whether it is not chargeable to tax, we have to take it on a case-to-case basis and decide what is there. So I am giving a generic idea that what is exempted and what is not exempted. So as I've already given you a generic idea, if any services are provided outside the jurisdictional area, that is chargeable to tax. And if you are doing so, then 30% is the leviable rate. Next. Now, just to inform you, now I was tempted to include this particular provision here, I was tempted rather. There was an old section called Section 1020A. Now this is an added section after 1020, so it's an old section. Now Section 1020A basically covered many authorities which used to be like local authorities, but actually they used to be different. Mostly the urban improvement trusts. There used to be improvement trust, like the area where I'm sitting now in Kolkata. There used to be a trust called Kolkata Improvement Trust. Now, there are various authorities or trust which has been created by the government. Now, there used to be a section, an old section 1020A, which used to say that any income of an authority under 1020A, that also used to be exempted if that authority has been enacted, constituted, or enacted by a law, and which deals with housing accommodation or for the purpose of planning, development, or improvement of cities, towns, and villages. So mostly the improvement trusts were covered under this section 1020A. Now this is I say this is an old section. I was tempted to include this so that there is no confusion with the participants today that ye kya hota tha if it had been an improvement trust. To clear that confusion, I've included. Now, for your information, Finance Act 2002 have deleted this section, and along with that, all authorities listed in under Section 1020A had been deleted by the Income Tax Amendment Act in 2002. So there is no more relevance of this section, but these bodies still continue to function. So if you are doing any advisory service or advocacy services for these bodies, please note Section 1020A had been deleted. Now, for your kind information, Supreme Court, the Honorable Supreme Court in 2018, in respect of an urban improvement trust, as I've already told you, these are the urban improvement trust, which was constituted under the Rajasthan Urban Improvement Act of 1959, and they were basically to look into housing accommodation. Now, they are the Supreme Court have very clearly held that they are not eligible for any income tax exemption upon this amended Section 1020A because that has been deleted. Now, basically, the Honorable Supreme Court had overruled a decision of the Rajasthan High Court. So it's very clear that these authorities which are constituted under any law which used to get an exemption under Section 1020A are no more eligible for this exemption. Now, again, I am telling you, this I have kept to just to give an idea to the audience that what is the difference between a local authority under Section 1020 and the local authority or an authority under Section 1020A, which was used to be there. Now, the list of exemption now comes to the other side. Now, as I've told you, Section 1020 clearly exempt all income from the municipality, except some. There is one rider into that. Now, Section 1015, interest payable. Now, if the local authority is paying any interest, that means somebody else is receiving that interest. Now, that interest, what is being received by that person is exempt from tax via Section 1015. Now, what interest? Now, there is specific detail about that interest. Interest on monies borrowed by the local authority, by it means by the local authority, before the first day of June 2001. That means if any money is borrowed before first day of June 2001, then only it is exempted. If any money is borrowed after 2001, then this exemption does not stand. Or any due dates owed by it before the first day of June to sources outside India. That means if the money is being borrowed from outside India, then only this section comes. Now, as you would understand, the presentation of this today is I have tried to pull out the relevant sections which involves or which concerns the local authority only. I am not dealing with the entire Income Tax Act because this is not possible on anybody's part to deal with the entire Income Tax Act. So I have only culled out or extracted out those provisions which deal with the local authority. Now, this particular section 1015 subclause 4 sub-proviso A deals with any interest payable by government or local authority for debts owed before 1st of June to sources outside India. Now, if it is inside India, then it is taxable. This exemption no more remains. Okay. Now, section 1015 subclause 7, Roman 7, are interest on bonds. Now, many municipalities have issued municipal bonds until date. Now, already in my certificate classes and in a revenue augmentation classes, I have already discussed that how and when a municipality can issue municipal bonds. Various big municipalities have already issued municipal bonds. Many smaller municipalities are on the verge of issuing municipal bonds. Now, if any municipality is issuing municipal bonds, then the interest that is being accrued to the bondholder, that interest is exempted from tax. Right, section 1015. That means in the hands of the bondholder, that interest is non-taxable. Now, this is the reason why when a municipality issues bonds, there are always a demand for subscribing to those bonds. Now, who can issue these bonds? These are called municipal bonds. These can be differently named also. These can be differently called as debentures also because they're all bonds. Now, this can be issued by a local authority or by a state pooled finance entity. Now, state pooled finance entity, now please note the spelling of the word pooled, P-O-O-L-E-D. That means it is pooling. That means a particular municipality is not issuing the bond, but a state pooled finance entity is issuing the bond because they are a bigger organization governed by the government or guaranteed by the government to issue such bonds. And the bond money which will come to the pooled finance entity, that will be distributed among the various municipalities, the urban local bodies, the rural local bodies. And the state pooled finance entity, when it will be paying interest to the bondholders, the bondholder will get an exemption on interest on these bonds. They will not be required to pay any tax on this. Now, this should be specified by the central government in the official gazette. Now, this law is there, this provision is there, but there is a rider that is the central government has to come with specific notifications for such exemptions. It is not a blanket exemption. So central government and the state government will discuss between themselves that a municipality is going to issue such bonds and such bonds should be governed by this provision. Then only this exemption would be available. Now, section 1015 carries an explanation also about state pooled finance entity. Now, state pooled finance entity, as I've already told, this should be set up under the pooled finance development scheme. Now, there was a scheme floated in the year 2007 by the ministry. At that time, it used to be called the Ministry of Urban Development of the Government of India. Now it is called the Ministry of Housing and Urban Affairs, MOHUA. Now, in 2007, there was a scheme called Pooled Finance Development Scheme. Now, if you want to refer to the scheme, please Google search. You will get the scheme document down. You can download and refer the scheme document. It is there. So the Pooled Finance Development Scheme document suggests that how the state pooled finance entity will be formed and how they will be basically borrowing money from the market through issue of such bonds. So the PFDS scheme is very well defined, very well structured. Now, kindly excuse me to say that this particular document was published or was notified in 2007. Now, I have not seen any amendments or changes to this document yet. So as of now, this 2007 scheme document stands. Now, any state can establish a particular state pool finance entity. Now, I can say that Karnataka developed this. So there is a precedence of that. Even in Tamil Nadu, you have got a Tamil Nadu Urban Development Fund, TNUDF. Now, TNUDF is also sort of a pool finance scheme fund. So these type of precedences are there in India. So anybody can refer these documents, the clauses and the sub clauses, the memorandum of association, how these how these entities are developed. Now, the structure usually it's a sort of a trust formed by the government. So all the government officials are trust members, and obviously they have got a bigger say in a financial management aspects, because the urban local bodies or the municipalities may be small bodies who cannot bargain or who cannot negotiate the rates well. But when it comes to a state finance entity, it can bargain or it can negotiate the rates well. Now, so this is the state pool finance. But again, in my presentation, I'm just giving an idea. You please check upon the detailed documents. As I've told you, you can go to the Google and download this document from the ministry's website. But again, this is a 2007 document. I don't know whether any changes have occurred to this document until date or not. Now, just to give an example, which are some of the municipalities which have already issued bonds, like Bangalore Mahanagara Palike, the BNP, the Bangalore Municipal Corporation, they were the first to raise go for placement of municipal bonds in 1997. And it was about 125 crores, which are carrying interest rate of 13%. And this was tax-free. So any bondholder who was getting 13% interest on his investment, on his or her investment, was basically getting a tax-free income. Now, mostly these were private placements. These were not given to open market operations. Now, Ahmedabad was there. They issued a tax-free 10-year bond for 100 crores, 1,000 million. Also, Municipal Corporation of Hyderabad issued a municipal bond in 2002 for 82 crores. Now, there are many instances of such issues. Visakhapatnam have done that. Kolkata have done that very long back. So these are there. Indore have done it. Amravati have done that. So these municipal bodies have done that, definitely with a guarantee from the state governments. Now, there's another section of which is relevant for local authorities, that is section 1010C. Now, any amount being received or receivable by an employee of a local authority. That means if a local authority employee is receiving any compensation on his voluntary retirement or termination of services, then up to 5 lakhs, that is exempted. That means this exemption is specific for an employee of a local authority for any voluntary retirement benefits, which is within 5 lakhs of rupees. Now, there are a couple of provisions to this section. Please go through the section kindly, quite well, because again, it is not possible for me to discuss in every detail of all provisions. I'm just giving you the rider. You can note them down. You can keep it that these are the relevant sections which you need to refer if you are in the local authority. Now, if a local authority means both PRIs and the municipalities for today's discussion. Now you are exempted from tax. So your incomes are not subject to taxation, subject to some riders, subject to some exceptions. But you are not exempted from the responsibility of tax deduction at source. Tax deduction at source, or TDS of income tax, is a responsibility given by the government of India on every person. Now, some may question me why you are harping or why you are emphasizing what on every person, because yes, now every person is almost included under the TDS responsibility. Now, TDS is a mechanism for tax collection. It's a mechanism for tax collection. It is not a taxation. We are not taxing anybody. We are collecting taxes on behalf of the central government. So this is an additional responsibility given to any person. Now, please remember, when we are imposing TDS on a person, it is not an imposition of tax on that person who is deducting the TDS. It is a responsibility given for collecting the taxes. So that means you are an agent of the government in the process of tax collection. So as an agent, when you collect the tax, you immediately deposit the tax to the government exchequer. Because you are an agent, it is not your tax. It's your responsibility of deducting and depositing the tax. Now, here we call it TDS, but nowadays it sometimes confuses because income tax has a TDS, GST also have a TDS. In fact, previously also VAT also used to have a TDS. But we have to be very careful when we define or when we talk about these provisions. So this is basically IT TDS, that means income tax TDS. Now, as I've told you, as a tool, it's a tool of the central government, of the government of India, that before you release any payment to someone, that means if you are paying someone some money, before you release that, you deduct a tax. That means you do an agency job on behalf of the government, you deduct the tax and give it to the government so that the person who is taking away with the payment will not evade taxes. So one, from the government side, that person will not evade taxes. So you are actually stopping evasion of taxes. And also on the taxpayer from whom you're deducting, that person will not also be burdened with a huge tax liability at the end of the year. That means that person will have a good night's sleep. That means some amount of taxes have already been deducted by someone and deposited. So he is not going to have a big burden and a sleepless nights of a huge tax liability. Now, therefore, it's a win-win situation for both the government and the taxpayer. Now, it's not a win-win situation for the agency who is doing this job. That means it's not a win-win situation for you. It's basically a burden for you. Why? Because you have to deduct the TDS, you have to deposit the TDS. So it's an additional responsibility on your head. It's not a win-win situation for you. It's a win-win situation for the government of India because it is getting advance taxes in advance rather, and the person who is supposed to pay tax, he is paying his taxes in advance. So his burden of sleepless nights are reducing. But as an agent, your sleepless nights go up. Please remember, your sleepless nights will go up because you are an agent of the government now. Now, any person who is responsible for making payment. Now here the definition of person comes, any person. So any person also includes local authority who is responsible for making any payment. That means you are liable, the local body is liable to make any payments, which is covered under the TDS provisions. Now TDS provisions is a specific group of sections which start from 190, probably 190, and it continues to 195 or 196. Please check. Again, I am not a big expert on Income Tax Act nowadays, but 190 to 196 or 197 is are all the provisions regarding TDS. You can refer that from the Income Tax Act and the rule books. Now, if any payment which is under the nature of a TDS, then you are liable to pay tax. Now, here the word liability comes. It's not only responsibility, now it's a liability. Now, please note the English definition of responsibility and English definition of liability are two different things. I'm responsible to take care about my wife and children. I'm not liable to take care about my children and wife. I'm responsible. So I will take care because I'm responsible to take care, but I don't have a liability to take care. But in this case, if you are a local authority, I will restrict to local authority today, you are liable to deduct tax. So it is no more a responsibility. So any responsible to make payment, you are liable to deduct tax. So here lies the biggest challenge of a local authority. Now, as I've told you, it includes all persons. Previously, it was not so. At previously, individual and Hindu undivided family were exempted from the list of persons who are liable to deduct income tax. But now, if the individual and HUF are required to pay rental income, that means they are paying rent to someone, and if your accounts are audited, then you are liable to pay certain taxes. I mean, you are liable to deduct tax and deposit. So individual and Hindu undivided are also included. But again, this is not the and it's not the focus of our discussion today, so I will not go in detail into this further. But for a local authority, it's a challenge and a responsibility and a liability to deduct tax and deposit the tax. Now, under the scheme of TDS, as I've told you, any person responsible for making payment must deduct the tax at source and must deposit the same to the government's treasury within the stipulated time. Now, there is a time limit for all depositions. If you don't do it, then you are liable to pay interest, liable for prosecutions, liable for etc., etc. Therefore, you have to deduct the tax. If you fail to deduct the tax, prosecution will be there. If you deduct the tax at a lower value, prosecution will be there. If you deduct and then don't deposit, prosecution will be there. So your liabilities are all there. Now, as I've already told you, persons include local authorities under section 231. So all local authorities are not exempted from the TDS liability, from the TDS responsibility, but you are exempted from paying income tax. Now, what are the consequences of default? Now, it's very easy to say in a sentence, but the consequences are not that easy to comprehend or to appreciate. You have to pay the tax, you have to pay the interest, you have to pay the penalty, and there can be prosecution also. Now, the prosecution always is on the chair, not on an individual. So any chair which is defaulting, suppose the municipal commissioner is at default, then the municipal commissioner's chair will be liable for prosecution till the cases are disposed of. So payment of tax, interest, penalty, and prosecution. Now, this is what you should be aware of. The second point of default is not so important for you, because second point of default says there would be a disallowance under section 40 subclause A. Now, disallowance would be, that means if you are making any payment and if you are claiming any expenditure, then that expenditure will be disallowed by the income tax authority for calculation of your tax liability. Now, since local bodies are not liable for any tax liability, definitely there are some riders. Now, these disallowances are not that relevant for you. But again, if you are liable to pay tax, then obviously this disallowance may come. Now, again, this is my way of interpretation of the law. Now, there can be other interpretations of the provisions also. Now, let's not start a debate on the interpretation of the law. Now, let's say this section would also be there. So if required, please kindly refer to this section of disallowance under section 40 clause A also. Now, what are the income tax TDS provisions? You can note it down. You can refer the law also, but I tried to go through all the relevant sections of the TDS, and I have found a list which would be relevant for you to comply. Section 192. Section 192 is for deduction of tax from salaries to employees of local authority. That means whomever you are paying salaries, if they are in the eligible list of taxpayers, then you have to deduct the tax from the salaries and you deposit that. So section 192. Section 194C, deduction of tax from payments to contractors or subcontractors. Now, this is the most widely used section of TDS in a local body, because you are doing many works through contractors or through subcontractors. So basically 194C would be there. So please go through the relevant provisions of 194C, how you should deduct, how much you should deduct, when you should deduct, when you should deposit. Now again, kindly excuse me, these are wide sections, a very detailed sections are there. It is not possible to go through every section and give you the details, but I'm giving you the list. Please go through these sections carefully, or ask your tax practitioners or chartered accountants or whoever is dealing with these things with the local bodies. Please help them out, or please ask for the help on these sections. 194H, if you are paying anybody any commission or brokerage, then these 194H would be applicable. TDS under 194H would be applicable. 194I, if you are making any payment of rents to anybody, if you are making any payments, I'm not saying you are receiving rent. If you are making any payment of rent to anybody, then that on that rental income, that payment you are making on rent, you should deduct the tax under section 194I. There is another section which is called 194IA. 194IA is basically if if there is a payment on transfer of certain immovable properties other than agricultural land. That means, suppose if your municipality or a local body is transferring any immovable property, land, building, anything to someone, and you someone is making a transfer and you are making a payment on that, then the payment that you are making will be subject to TDS under section 194 IA. That means you are purchasing any property or getting a transfer from certain person and you have to make a payment to that person, then you are liable to deduct tax under section 194 IA. Now 194 IC. Now this is a section which I have not worked much, but I thought that this may be a relevant section for you. 194 IC covers that if you are making a payment of any monetary consideration under a joint development agreement. Now, basically nowadays we are going into many private-public partnership agreements or joint development agreements, or sometimes a municipality has a land and then it is giving the land to any promoter or developer to construct a property of the municipality. So in this joint development agreement, if there is a payment of a monetary consideration of some part, then section 194 IC would be applicable. 194J, like 194C, 194J is very widely used in a local body, because 194J deals with payment of fees or a royalty to a professional or for technical services. Like if any chartered accountant is working in a municipality in any capacity, then the payment that is being made to the chartered accountant or to the lawyer, then that payment is subject to certain taxes. That is subject to clause section 194J. If any consultant is working for a technical service, if any engineer is providing any engineering services, then those services will also be subject to TDS under section 194J. 194LA. 194LA covers if you are making any compensation on a compulsory acquisition of immovable property. Now, this is a very common section nowadays because municipalities are widening their infrastructure. And when they are widening their infrastructure, they have to go for compulsory land acquisitions. Now, whenever you are going for a compulsory land acquisition under a scheme and you are making payment to the person who is relinquishing his property, relinquishing his land, then to the person whom the local authority is going to pay will be subject to TDS under section 194 LA. And there is a new section, rather new to me. Again, I have not have worked on much on that. Is 194Q. 194Q is that if any municipality are purchasing any goods of the value or aggregate of such a value from a single vendor and exceeds rupees 50 lakhs in a previous year, then 194Q is applicable. Now there are certain conditions here. Again, please refer to the conditions. It is not blanket applicable. There are certain conditions here. Please go through the conditions of 194Q. But the bottom line is that if you are purchasing any goods, like a municipality can purchase pumps and motors from a particular vendor. Now it can exceed 50 lakhs in a previous year, then that 194Q becomes applicable. Please go through the section carefully. Those who are the members of the institute, please appreciate how to interpret this section for a municipality. Because my interpretation was that probably this 194Q becomes applicable for any local body who is making payments more than 50 lakhs of purchase of any goods or in aggregate. Please refer to it. I just referred it. Please note it down and kindly see, because my interpretation says it is applicable for a municipality also. Now, after you have deducted the taxes, what you should do, you should deduct the tax at the time of payment or credit to the payee in the accounts. Now, here comes the critical factor, because all municipalities mostly are still following the cash basis of accounting. You have not migrated to the actual basis of accounting. If your municipality have migrated to the actual basis of accounting, so the day when you are receiving a bill and you are recognizing that payment, on that day you have to deduct the tax. It is not on a cash basis, but it is happening mostly in almost all municipalities. if you have received a bill in the month of March from a contractor, you may not be processing that bill within the month of March. You are processing the bill in the month of April or May. That means in the next assessment year. But since you are following a cash basis of accounting, you are actually deducting the tax in the next accounting year, or the next assessment year, or the next financial year. But that contractor or the contractee or the consultant who is following an actual system of accounting, he has already taken note of or recognized that income in his books of accounts, and obviously that income goes into his income of that year, but he's not getting the tax credit or the tax TDS credit in that accounting year. So there always lies a reconciliation or timing difference. Now, all practitioners who are attending this session and who will understand this aspect, please understand that there will always be a timing difference, because the municipal accounting system, which still follows a cash basis of accounting in most of the cases, are not aligned with the actual basis which a private consultant or a company is following. Now, but if you are following an accrual basis, the day you recognize the payment, you have to deduct the tax, whether you have made the payment or not. That is not important to the credit on the payee of the accounts. At the prescribed rates or lower rates are applicable. Now, if you are not deducting at the prescribed rates or the lower rates, then you are liable for prosecution, liable for interest. Now, second, deposit the same in the government within time. Go and deposit the same within the government. If it's a government to government department, then it's a notional entry between the codes of accounts, the treasury codes. Then you file the periodic TDS returns. Now, mostly the chartered accountants are helping the municipalities across India to deposit these TDS returns. So again, I am not a very big expert on any of these things. Nowadays, everything has become online. But when I was practicing in 2002, 3, 4, they're all manual systems. And then you issue the form 16 or 16A. Now, it is no more an issue physically. It is all comes to the traces. So these are all electronically filed now and electronically generated. So you all know these better, much better than me. But these are the steps that you should follow. Now, this was all about the income tax. Now, let me move to the Goods and Services Act. Now, this is where I may falter also, because the Goods and Services Act is a very, very comprehensive and a very complicated act, I would say. Now, please correct me if I'm wrong and don't misunderstand me. Now, basically, when we were students, we studied the Income Tax Act in length and breadth, and obviously for the examination purpose, and we appeared for the examination. So obviously the provisions are known, but Goods and Services Act came when we were just going into the wrong side of the age now, wrong side of the barrier. So nowadays, hardly that energy is left in me, at least, to go through these very details of the GST Act. But whatever I've understood, definitely this is very much similar to our old value-added taxation system which we had previously, the mod VAT or the excise or the central excise. So it's much like that, but definitely in a new avatar. But I would say GST is still a very, very complicated to me. And every day a new circular comes. Now it's difficult, at least for me to, who is not in regular practice, to go through them. But those who are in regular practice and those who are dealing with the local authorities, please refer the circulars carefully, which come every day morning, and so that you can do a comprehensive advocacy and advisory to the local authorities. But whatever I know, I'll try to put it on paper or put it in this presentation. Now, for the non-practitioners who are here, I mean, just to say, what is a GST? It's Goods and Services Tax. So please remember, previously we had the Service Tax Act, which is basically under the Finance Act, 1991. Service tax was there. Now it was for the services. For the goods, there is to be a value-added taxation, VAT of every state. There is to a Central Goods Tax Act, Central Goods Tax Act. So these were all there. Now these were all merged together. So the all indirect taxations are merged together and brought under the single ambit of Goods and Service Tax Act. Now, when this merging was happening, all indirect taxes, many indirect taxes were there, which were also merged under the Goods and Services Tax Act. Now, there is one important tax which got merged, is the advertisement tax, which the urban local bodies or the panchayat is to levy. Now, that also got merged here. Now, I don't know who would be taking the session on 29th of July, 2022, as Gupta sir had said, or as Shivani had said. Basically, that, as I understand, that deals with the local body taxation, which may cover the property taxations and other taxations. So that session, whoever is taking that session probably would be harping or dealing with that advertisement tax. But for the time being, I can say the advertisement tax had been subsumed, which advertisement tax used to be levied by the municipality has been subsumed under the Goods and Service Tax Act. Okay. Now, the GST Act was passed in the Parliament in 2017. But though the work for this enactment or for the introduction of GST started long back, but it got passed in the Parliament in 2017, and it came into effect from 1st of July 2017. Now, again, 1st of July 2017 was the mid of a financial year. Okay. Now, what is GST? Again, I would say I'm not an expert, but still I'm trying to say GST is a tax that is levied on the goods and service tax, which is a multi-stage. There is a multi-stage laying. That's why this is a value-added taxation. That means the taxation happens on any value addition. On any value addition, this taxation happens. And it's a destination-based tax. That means the final tax is deposited at the destination where the consumption happens. So there's a destination-based taxation, there's a multi-stage taxation, and it happens and levied at every value addition. Now, here is an example or a diagram which I've picked up from the internet itself. Now, if you are manufacturing biscuits, then the process starts with the procurement of flour and sugar. Now, at the procurement stage of flour and sugar, you pay tax. Then you do some manufacturing and you just manufacture the biscuits. There is a value addition. Value addition means you top up something on the earlier part to make it a new part. So it's a change that is happening. So that value addition bring biscuits, you pay a tax. You put a label, that means you put another value addition. Then you get a perfect biscuit. There's another value addition which you sell. So it's a multi-stage taxation system. It's a destination-based taxation system. The final tax goes to the state where the consumption happens. So this is a little difficult to appreciate and comprehend. It's not income tax you levy and just to collect. Direct taxation is easier to understand. Indirect taxation are always difficult to comprehend and appreciate, at least for me. Now, when the value addition happens, it happens at the purchase of raw material stage, production stage, warehousing stage, selling to wholesalers, sale of the product to the retailers, then selling to the end consumers. So at every stage, this value addition happens. And for every value addition, there will be a levy of taxes and there'll be adjustment of the previous taxation. So that is a value added taxation system. Okay. Now, just an example. Again, these examples are quite well known to all my fellow brothers and sisters who are attending this session on GST. But just to give an example or an idea to the non-practitioners, goods manufactured in Maharashtra, if it is sold to a final consumer in Karnataka, then the GST is levied at the point of consumption. That means the entire SGST, the state government portion of the taxes goes to Karnataka and not Maharashtra. That means Maharashtra doesn't get any taxes for that. The CGST goes to the government of India because every GST will have a component of a CGST and a CGST and a SGST and a CGST. So the government of India part will go to government of India, but for the state government part, it will always go to the end destination state. Another example, a service provider from UP provides services in UP. Now, if it is within UP or within the same state, then the SGST will go to the UP and the CGST will go to the government of India. A service provider from Bengal provides services to in UP. That means I suppose go to Delhi or say Haryana or UP to provide my professional services from Bengal. Then it is IGST, Integrated Goods and Service Taxes. And this straightway goes to Government of India. Now here, immediately the states do not get a share. The states get a share of IGST at a later stage, which is upon a calculation. Now we are not going to the details. Now, therefore, there are different methods or basis of the taxation. And obviously this is I mean, to me, this has complicated the whole understanding of the GST, of the rules. Now, the CGST Act 269 very clearly gives the definition of local authority. Now, this definition, if you can look, this definition is almost similar to the explanation to 1020 of the Income Tax Act, but not again exactly the same. There are certain definitions, some differences over here. So for GST, you have to follow this definition. For income tax, you have to follow that definition. Now here it's also clearly says local authority means a panchayat, Article 243, a municipality, Article 243P of the Constitution, a municipal committee, Zilla Parishad, etc., who are supposed to manage the municipal fund. So this part is similar to section 1020. A cantonment board is also there. A regional council or district council constitute on the 6th schedule to the Constitution. Now there are many autonomous district councils in our country, mostly the tribal areas. Now those autonomous district councils or regional councils are also covered under the local authority here. A development board under Article 371 of the Constitution. So development board under Article 371 of the Constitution covered. A regional council constituted under Article 371A of the Constitution, they are also covered. So here the definition of the local authority is slightly wider than the definition or the explanation given to section 1020. Now, I will not go into the details of this thing, but just to tell you, if a local authority is a panchayat, then it has got 29 specific functions to be delivered by a panchayat. Now it starts with agriculture. That means a panchayat can do agricultural activities. A panchayat can do land improvement activities, minor irrigation, animal husbandry, fisheries. Now, if you are doing any of these activities and if you are earning any income, then that income is exempted from tax, income tax. But that may not give you an exemption under GST. So please note that exemption from income tax will automatically give you an exemption under GST. Not so. The GST provisions are different. So therefore, these 29 functions are the responsibility of the panchayats. Now, again, this list you can refer from the 11th schedule of the Constitution. 11th schedule will be there. Please read with Article 243G. I am not going into the details now. Just a list of 29 functions are there. All these functions are the activities or services that a panchayat should deliver. Now, next, Article 243W read with the 12th schedule. So 11th schedule and 12th schedule of the constitutions are important. Now, under the 12th schedule, there are 18 functions given to the urban local bodies or the municipalities to perform. Now, if you are performing any of these services and earning any income out of that within your own jurisdictional area, then income tax is exempted. If any of these services except water and electricity, if you are performing outside the jurisdiction area, then income tax is there. But these provisions, this exemption is not given so under the GST Act. That means you are not exempted from something. Your exemption comes in a different manner. Your exemption is not automatic because you are giving an exemption under section 1020. So here the exemptions are different, but these are the services. Please remember and please read these services very carefully because GST Act will always refer to these services time and again. We will look into the next few slides, how these are getting reflected time and again. Now, GST is an universal coverage taxation. Now, it is basically an universal taxation. Almost it covers everybody because there is a system of an input tax credit. Because ITC or input tax credit means you get an exemption. Now, again, this input tax credit, how far this is applicable to a local body or local authority, this needs to be judged on a case-to-case basis. Now, again, whoever is your practitioner must explain to you how this input tax credit can have a benefit to you or may not have a benefit to you. But there is a concept of input tax credit because any value addition done at your level will give you an option for an input tax credit. Now, almost all activities of the governments the ULBs, the PRIs are in principle covered under the GST. Now, that doesn't mean that you have to pay tax, but the reference is there. That means these activities under the GST law, therefore, are in principle covered. There are almost no activities which are outside the GST coverage. Now, there are certain exclusions, some specific exclusions. Please consider this specific exclusion. Now, again, the GST law, as I've told you, is a very vast law. Now, I have to cull out or extract these exclusions for this presentation. Now, I may have missed a few exclusions. So any practitioner, chartered accountant, brother and sister who are the participant today, please go through the law very carefully when you are dealing with a local authority, because local authorities are not your regular client. Local authority is a different client. An individual, an HUF and a company will have a different set of business pattern. Local authority's business pattern is totally different. The laws are different. So when you are dealing with a local authority, please ensure that the local authorities' exemptions are well discussed with the local authorities. Now, I am giving you a list, whatever I could collect. The specific exclusions are services provided by a government or a local authority to individuals in discharge of its statutory powers. That means if you are given a statutory power to discharge any function and you are providing a service for that, like issuance of a passport, issuance of a visa, a driving license, a birth certificate or a death certificate. Now, birth certificate or death certificate is under the law that you should deliver. That means you should provide these services. Then those services are exempted from GST. That means you should not levy a GST rate on that service that you're providing. Suppose for a issue of birth certificate, you are charging the father and a mother of a child who is born, say 30 rupees. Now, you should not levy 5% or 12% or 18% GST on that. That is excluded. That means you should not charge any GST on that service. Assignment of a right to use natural resources to an individual farmer for the purpose of agriculture. You are giving a right to use natural resources which a local body has. Suppose you have an agricultural piece of land, or you have a plot of land where you have an orchard, for the purpose of agriculture. I don't know whether rearing of plants is under agriculture, not that definition you need to look at. Let's say you have a plot of land you want to put into a paddy cultivation. The municipality have the land or the panchayat have a land, and that land you're assigning the right of the natural resources to the individual farmer, then that is exempted from GST. But if you are doing to a company or a farm, you are not. Then GST is applicable. So please understand the connotations of the law, the legal framework. It's not so easy to comprehend for me. I have tried to do at my best. Services provided by a local authority by way of any activity in relation to any function entrusted to a municipality under Article 243W or to a panchayat under Article 243G of the Constitution. These are all excluded. Now I go back to this list. Now here I said these lists are important now. That means any panchayat, if he is providing any services provided in this list of 29 services, or a municipality is providing any of the functions under this list of 18 functions, if you are providing so, then these services are excluded from GST. That means if you are providing any plan sanction services, you are sanctioning the building plan of some person, then you are not going to levy GST because this is covered under that list. Now the automatic question comes, if the municipality is providing any service which is not covered under that list, then that is applicable for a GST rate. So please understand the services or the functions under Article 243W or Article 243G, refer 11th schedule and 12th schedule of the Constitution. Now, any activity in relation to any function like healthcare and education, they are also excluded. There are some specific inclusions. Income generating activity by way of auction of land for a limited period. Income generating activities by way of auction of land for a limited period, or renting of property. Now, if you are renting out a property, then that is under GST. That means any rent that you are collecting or you are charging to a person, you should levy, as I have understood, you should levy a GST on that. Please refer the law clearly on that. Now, these activities are subject to GST if the taxable revenue crosses the threshold limit. Now, there are again some taxable threshold limits are there. So you have to refer to the taxable threshold limit. Again, I would say this is not possible on my part to include everything in this presentation of today of 1.5 hours. I'm just giving you the idea. Renting of property is covered under the GST. So please refer the rules and the act very carefully. Now, if the local authority is providing any services by the central government to another central government, state government, or local authority, that means a municipality is providing services to another municipality, or a municipality is providing services to another panchayati, then those services, whatever be the services, will be exempted from taxation. Now, services for regulation of land use, approval of construction of building, that I've already said, because this is already covered under the list of under Article 243W and G. That means any building sanction permissions are within the purview of the municipality or the panchayat. So those activities or services are exempted. Now, services up to ₹5,000 in a year supplied by a government subject to certain terms and conditions. Now, this is another provision. I don't know how far this has changed very recently, but this provision was also there when initially this thing started, that services up to 5,000 will be exempted. Now, I'm not sure that what happens beyond services beyond 5,000, or if it is covered under any of the previous sections, that if it is under 243W or G, then what happens? So please understand the meaning of these exemptions carefully. Now, as I again telling you, I am not any expert of any GST, but I'm trying to put up all these points before you. Now, services provided by the local authority to an individual. If it's an individual, it is exempt from tax. So no worries if you're providing any services to an individual. Now, services by the local authority to a non-business entity. That means if it's a non-business entity, except transport of goods or passengers, then that service is also exempted under the GST. So it's a non-business entity. But if it is a business entity, so business entity up to ₹20 lakhs of the threshold are exempted. But exemption is, I mean, if it is beyond 20 lakhs, that means if you are providing services to any business entity beyond 20 lakhs of turnover, then it is not exempted. But if it is a renting of service, immovable property, then whether it is 20 lakhs or not, it is not to be seen. It is this exemption is not applicable. That means for renting a property, whether it is for a business beyond 20 lakhs or below 20 lakhs, for renting a property, you have to levy GST on that. Okay. So renting a property is a big income for any municipality, because rental income come from shops, slaughterhouses, from land, from buildings, etc. So please carefully read the provisions of renting and the GST applications. Fines and penalties imposed by local authority, because since it is not a service, any fines and penalties are not applicable or are not eligible for a GST. So they are exempted. Okay. Now it is very important for the local authority to understand. Now, will all contractors and consultants levy GST on you? No. Will all contractors and consultants whom you have appointed under a contract will levy GST on you? No, it is not. It is very clearly said in the circulars. Mainly refer the circular or the notification number 12/2017, the Central Tax Circular 28 June 2017. it clearly says, if any consultant or a contractor is providing 100% pure services to a local authority in respect of functions which relates to Article 243G for Panchayat and Article 243W for a municipality, then that 100% pure services is not eligible for any GST. That means the consultant and the contractor will get this exemption from you. They will not levy any GST on the municipality. Please note this section and this circular, this notification. That means, suppose if you have appointed me as a chartered accountant to give you an advisory services for making a draft design document for a slaughterhouse. Slaughterhouse is within your function. So when I am giving a draft design document as a chartered accountant, I charged you 1 lakh rupees of fees. Now my professional fees will be only 1 lakh. I will not levy the 18% IGST or CGST or whatever. I will claim the exemption based on this notification. Please appreciate these notifications clearly. That means the municipality will only be liable to pay 1 lakh. They will not be liable to pay 1,18,000 because this is the notification. Now again, these notifications changes regularly. So kindly appreciate to read the regular notifications carefully and regularly. But as of now, any 100% pure services which relates to any of the 18 functions or 29 functions are exempted from applicability of GST. That means neither I will levy any GST, nor you will, local authority will pay me any GST, nor I will deposit any GST. Okay, so this is the law. Now, for example, I'm just giving you an example. Supply of manpower. That means a particular contractor is supplying manpower for cleanliness of roads, public places. There can be architect services, consulting engineer services, etc., etc. Now, all these are 100% pure services provided by business entities, which does not involve any supply of goods, will be treated as pure services. Next, in case of composite supply service, where up to 25% of the goods are there, that means it is not 100% pure services, but is a 25% component of goods and 75% component of services. Then from with the effect from January 2018, these functions are also exempted under if the functions relate to Article 243G or 243W. That means if the composite supply is more than 25%, that means the goods component becomes 26% and the service becomes 74%, then GST is applicable. But if it is up to 25% of goods, that means suppose I am being appointed as a contractor for management of street lights. Now for street lights, I am supposed to brief the bulbs also, some of the wires also. Now in my contract bill, the quantity of material I'm supplying is 20,000 rupees and my services for maintenance is 80,000 rupees. Therefore, the component of the materials is 20% of the contract value, then this exemption comes. If it is 30,000 of materials, then this exemption doesn't stand. Then I have to apply the GST at the applicable rates. So services of maintenance of work of parks, definitely it's a pure service. Security support services is a pure service because the security services are provided for maintenance of assets, maintenance of water supply treatment plant, maintenance of the security of the municipality. These are covered. So these are pure service. If the local authority is receiving any consideration from the central government or state government in the form of a grant, then it is exempted. You are not supposed to levy any GST or go by a reverse charge mechanism also. Services supplied by a partnership firm of advocates. Now it's only given to the advocates, not to the chartered accountants. Services supplied by a partnership firm of advocates or an individual advocate by of legal services to the local authority is also exempted from the GST applications. It is not so case in the case of a chartered accountant. So please again refer the law well, because I have understood that this particular exemption is allowed to the advocates only, firm of advocates. Now, please note, ULBs, if the value of contract is all inclusive, that means when you are giving a contract to a consultant, just 1 second. Sorry. if you have given a contract to a consultant or a contractor, and that contract is all inclusive of taxes, then don't worry about the GST component, and don't worry about that the change in the tax rates also. But as I understand the GST Act, this type of consolidated billing probably is not allowed nowadays. You have to give a breakup of the value of services and the value of tax component, because otherwise we cannot fill up those portion of our invoices, tax invoices. But in the case of a contract from the local body side, if it is all inclusive, then if there is a change in rate in the contract, if the change in the rate of the GST, then you don't worry because it's all inclusive. Okay. Now, GST definitely on certain fees it will be chargeable, as I've said. But if it is required under the law, like say certification, testing, or issue of passports and visa, then under any law, then such GST will not be applicable. But in other cases, if any fee is there which is not within the list of services, then obviously GST would be applicable. Now, any person making interstate supply. Now, please remember the local authorities. If you have appointed me, say a municipality, say Chennai Corporation has appointed me from Bengal, I will be coming from an interstate. That means there will be an interstate supply of services. Now, in that case, you please enforce me to have a GST registration, because any interstate supply of goods and services must have a GST registration, whatever is the value of my turnover, whatever is the worth of my turnover. Any interstate supply will have that. Now, if it is not so, then RCM, reverse charge mechanism, will be made applicable. But since you have to ensure that this registration is there with me, then only you please appoint me, otherwise don't appoint me. Because I will be liable to pay tax on any interstate supply of goods and services. So I will levy that and he will pay me that. Okay. So suppliers compulsory need to take registration and pay GST. Now, the ULB, you should not pay again on reverse charge mechanism, because you have ensured that that supplier has the registration or not. Now, as I have understood, there is also a provision for tax collected at source, TCS. Now, TCS is yet not applicable to local authorities, but again, please refer the law well, because probably now I'm saying it is not applicable, tomorrow it may become applicable. So please refer whether TCS is applicable or not, but as I've understood, it is not yet applicable to the local authorities. Now, I want to make a point here, a specific point. Now, GST on agricultural activities. Now, why I'm making this point in an emphasized manner is that because a panchayat can take up agricultural activities. A panchayat can take up agricultural activities because that is there in the constitution itself. Now, according to the GST Act, only an agriculturist, to the extent of supply of produce out of cultivation of land, is exempt from GST registration requirement. An agriculturalist. Now, further, the Act goes on to define an agriculturalist, which says it must be an individual or a HUF who undertakes cultivation of land by own labor, by the labor of family, or the servants on wages payable in cash or kind. Now, therefore, this GST exemption in agriculture is there for those individual or HUF who are undertaking agriculture on their own. Now, then what happens if a panchayat takes up agricultural activities because it is a land? Then what happens? Now, therefore, as I have interpreted, that only the small agriculturalists are exempted from the GST compliance. But any other person who is a company or a LLP or anybody who is a local authority who is there, who has an agricultural land and doing agricultural activities and earning, they are not exempted from the GST registration and they have to comply that. Now, again, I would say why I'm making this point I'm emphasizing this point, because Article 243G says that agricultural activities can be taken up by the PRIs. Now, concessional rates are applicable for local authorities. Now, concessional rates are that Now, as I have understood, there are various rates of slabs of rates of GST. There is a concessional rate for works contract. Now, probably still today, works contract are attracting 12% of flat. That's a concessional rate, because the highest rate, the highest slab rate is 18% and 40%. They are not the concessional rate, but anything below than that are the concessional rate. So 12% concessional rate is applicable for any works contract which are local authorities giving to any contractor. So for anything, for building, construction, fabrication, installation of any movable property, so these will attract a consolidated rate of 12%, where IGST, if it is a outside supplier, outside provider or a contractor, it will be 12% IGST, and if it is a local, that means within the state, it will be 6% CGST and 6% SGST. Now, if there is a subcontractor to the main contractor, then the subcontractor is also eligible for this concessional rate of 12%. Please note, if there is a legal subcontractor, legal means in the contract document itself it is mentioned that if it is a legal subcontractor, then that legal subcontractor will also be eligible for 12% concessional rate. But if the subcontractor again have leased out, or again a subcontractor to another subcontractor, that means there is a subcontract, then that subcontractor will not enjoy this concessional rate of 12%. It will be full rate for him. Whatever is a rate, higher rates of goods and services that is providing, that would be applicable. So this concessional rate is applicable for contractor and a subcontractor, but not to a subcontractor. Please note this. Again, refer the law very carefully. Now, concessional services in respect of services provided to a local authority. Now, for predominantly earthwork, section 219 of the CGST Act, if it's a predominantly earthwork and where it is constituting 75% of the works contract, then that earthwork will attract a concessional rate of 5%. So concessional rate of 5% is there. If it is IGST, it will be total 5%. If it is SGST and CGST, it will be 2.5%. So if it is a artwork and which constitute more than 75% of the works contract, because artwork are very common things in a contract which a local authority executes. Now, in a case of a composite or a mixed supply, if it is a composite supply which are naturally bundled, that means there are two or more supplies. Now, any GST expert will be more able to explain what is a bundle supply and which is not bundle supply. Again, I would say I'm not a big expert on this definition, but what I understand, if it is a combination of two or more supplies which carry more than one rate, then understand whichever is the principal supply. Whatever is the principal supply, that rate of the principal supply will apply. So whichever is the principal supply, if you are buying a shoe with a shoe polish, then shoe is the principal supply and the shoe polish becomes the additional supply or the subordinate supply. So any principal supplies rate will be applicable for both the supplies. So this you all know. So kindly explain to the local authorities when you are advising or advisory with them. Now, in case of a mixed supply where such bundling out is not possible, so it shall be that particular supply which attracts higher rate of taxation. So it's a normal residual section. If you fail to understand what is the nature of bundling and unbundling, you apply the highest rate. So this is easy to understand. Now, there can be a possibility of a reverse charge mechanism. So please note, as I've understood, there's a possibility of a reverse charge mechanism also for a local authority. In case of services you are providing to a business entity, and the business entity is liable to pay GST under reverse charge, provided the business entity is registered under CHG. That means you are not required to pay reverse charge under the reverse charge mechanism if the business entity is registered under the CGST Act. But if the business entity is not registered, then there is a liability of a reverse charge mechanism also. So please understand that how this reverse charge mechanism becomes applicable for a local authority. So in case of a renting of an immovable property, this reverse charge applies if the recipient of services is registered. So if the lease is not registered under the CGST Act, then you are liable to pay the GST. So kindly understand this renting of property and the lease, and how this recipient of services are registered or not. So this is an area where reverse charge mechanism would be applicable. So as I have understood that in view of that above, that the rent collection from various leases of municipal properties, you have to bifurcate between rent from leases registered under the CGST Act and the rent from unregistered leases, because rent from unregistered leases will apply or will attract the RCM modalities. So please try to bifurcate that, otherwise this gets all mixed up in your accounting processes. So this is very important, how the accounting of the rental income is done by the GST, by the local authorities. Now, there is a provision of input tax credit, but again, how far input tax credit will be applicable for a local authorities accounting part, that I am not very sure. But just to give an idea that what is input tax credit, now it is basically to take credit of taxes already paid. That means you only pay tax on the value addition. So this is the concept of the input tax credit. But since local authority is not always paying GST, are exempted from various layers of GSTs. So how far these input tax credit will be applicable or available to them, so that must be understood one-to-one basis. And I think there will be good practitioners with the local authorities who can deal with them, because the law is very clear on these ITCs. But again, this is a wide area, this is a vast area to comprehend and to appreciate in a very short period of time, like a presentation of today's. But ITC, always understand the applicability of ITC. But again, just to give an idea, if you're claiming ITC, then you must possess a tax payment document. You must have a receipt of goods and services. Whether you have actually paid the taxes, nowadays these are all online. One can see how much tax paid or not, and our filing of returns. So these are there, the input tax credit. Okay. Now there is a provision for TDS on GST also, like there's a TDS on IT. So the logic is very same. That means on the contract, you have to deduct a TDS. Rate is there. I think it's 2% probably. So 2% TDS will deduct, 1% for the 2% for the IGST, and then otherwise 1% for CGST and SGST. So anything, I mean, again, it's a revenue for the government, and the local authority will be liable for this deduction. That means if any contractor is giving a bill of 12% with a 12% or whatever works contract, then 2% you should deduct, and you should deposit to the government exchequer, and you should give a return or a certificate to the taxpayer, and they will adjust it on other basis. Okay. Now for this, there is a registration requirement is there, and there is no threshold limit for this registration requirement. So all local authorities must get a GST registration done, and to get this GST registration done, you can use, or rather the TAN allotted by the income tax authorities will be used for this GST registration. So in case of any individual who is getting a GST registration, his PAN is made applicable. But in case of since you are not supposed to have a PAN because you're exempted from tax and you may not have a PAN, so in that case the TAN would be there, because definitely you are deducting tax, because that responsibility and liability under the Income Tax Act is there. So the TAN would be used for the GST registration. Now again, the liability to deduct the TDS is, as I said, 2%. It is 1% for SGST and 1% for CGST. So for any supplier of taxable goods and services, if it under an individual contract, it exceeds 2.5 lakhs. Now, I don't know whether this 2.5 lakhs threshold still stands or not. Please check on the threshold limits, because they change very frequently. So any above the threshold limit, if it is there, then you have to deduct the TDS. Now, deduction of TDS is not required when the location of the supply and the place of supply is different from the location of registration of the recipient. Now, I don't understand much of this, but you have to understand that if the location of a status of the supplier and the place of supply is different, then deduction of tax is not required. Again, please appreciate the condition, the terms and conditions about this exemption. Now, when you have to pay the TDS, you have to pay the TDS within 10 days from the month end, and there would be a provision for a TDS return also in GSTR 7. Now, there are various forms which are being used for these GST returns. So please the chartered accountants, my brothers and sisters who are trying to go through this presentation, please help them, that there are various forms which are there, which are required for these return submissions. Now, also by 15th of the month, there has to be a working paper on GST. A document has to be submitted during the current month in respect of supplies received. GSTR 3B is there. It's a return for outward supplies. Please see how far this is applicable. GSTR 7, the TDS monthly return, and GSTR 9, the annual return. Now, there can be some more forms. Please excuse me if I have not put down all the forms over here, because I did it from my understanding of the law. Time and again, I'm saying I'm not an expert on the GST, but whatever I've understood from working with the QLBs that I've done. So these are some of the forms and some of the returns and the GST provisions. So I end my presentation here. Now I have slightly overrun by 5 minutes, so I have 10 minutes to take your question. So I stop sharing my screen and I go to the chat box if it is there. I don't see any chat box.
Thank you, sir. Sir, we have received few questions.
Yeah.
First is, as income tax of local government, municipal corporation is exempted under Section 10, subsection 20 of the Income Tax Act, is it necessary to file the income tax return keeping in view of 7th proviso to Section 139, subsection 1, electricity consumption more than ₹1 lakh?
Difficult. Now, I think so, because these are overriding or overlapping sections. Now, return filing doesn't mean that you have to pay tax. Now, as I've said, income tax is exempted under Section 1020, but nowhere it is said that you are exempted from filing an income tax return. So obviously, the income tax return provisions under Section 139, where it is there, you have to file a return. It can be a nil return also, but the submission is there. But now the question comes, for filing of return, you need to have a PAN also. So these are overlapping sections. Please refer to Section 139(7), as you have said, whether the applicability for a local authority is there or not. So kindly refer to that. Next.
Next is, sir, whether TDS under Section 194(1), subsection C is applicable to revenue sharing, joint development agreement?
Yeah, I've said that 194C, 194IC is there, because joint development agreement nowadays, municipalities are going into joint development agreements. So you have to see whether the revenue sharing is there, and if any monetary concession is paid, then that becomes applicable, because 194IC clearly says any person. If I remember correctly, any person. So any person includes a local authority. So any sort of a joint development agreement, if it is there involving a municipality or a PRI, then I think that is applicable. Next.
Next question is, sir, is sanitation service exempt from GST?
It's a sanitation service is under Article 243G and Article 243W. That means any sanitation services which the municipality is providing, they are all exempt from GST. You don't have to apply any GST on that. So please refer, don't pick up only sanitation services. Please refer to the entire list of services under 243W and G. Please. Next.
In case of pure supply of services, like manpower for cleanliness of road or GST filing services or services relating to functions under Section 243 G/W to a Mandi Summit, local authority not being a panchayat or municipality, also exempted from GST?
No, I don't think Mandi are covered under the GST, are under that local authority definition. Mandis are not, because mandis are basically the market authorities, basically the agricultural market produce authorities. I don't think mandis are covered under local authority, because please refer to the definition of local authority under Section 269 of the CGST Act and the CGST Act rather, because it very clearly says who are the local authorities. Mandi is not providing any services under Article 243G or 243W. So I don't think this exemption is applicable for a Mandi. But again, if cleanliness of a road, you are providing a services to a municipality or to a PRI, then definitely it is under that service of 243GW and that circular. So this 100% pure service is exempted from GST. Next.
Next is provisions of TDS under GST at the rate of 2% deduction is applicable to all Mandi Samitis or marketing committees.
Again, I will not go into Mandi Samitis and marketing samitis because they are not under the local authorities. As my interpretation of the law goes, they are outside the definition of the local authorities, which we have not discussed yesterday.
Okay. Next is if I hire labor, pockling job from an agency for cleaning big drains and ponds, does it will attract GST?
Now, who is submitting the bill? The contractor or the Safai Karmachari? Because if it is an agent, then agent will supply a bill for cleanliness of the drains. This is definitely under the services under 243G and W. Article 243G and W. So obviously this will be covered under. So no GST will be levied by the agency who had hired those laborers. So GST is exempted on that. It's a pure service. It's a pure service. Now, just to give a rider, now whether that agency is also providing the materials for cleaning, because if they're providing materials for cleaning like the bleaching powder or say the jacks and other articles, so you have to see whether that supply is a mixed supply of goods and labor, and if it is a mixed supply or a composite supply, whether 75%, 25% ratio is maintained or not. If more materials come, then obviously there is no exemption. So it has to be a pure services or a 75%, less than more than 75% services or a 100% services. Yeah. Next.
Without PAN, can an ULB apply for TAN?
Yeah, I think so. I think so. They can apply for a TAN. I think because when we were practicing previously, in these cases, they can apply for a TAN. It's not necessarily that you need a PAN, because I don't think the provisions are like that. But please refer again. But as I know, you don't require in case of a government body, you don't require a PAN to apply for a TAN. And with a TAN, you can apply for a GST also, as the law says. Next.
For municipal corporations, whether the non-refundable deposit, donation received from tenants will come under the head rents for paying GST?
This is a good question. Now, deposits or premium, if you are paying any, I don't think it's a sort of an advance rent which is adjustable. But if the contract with the tenant or the lease agreement says this is a part of a rent, then obviously that becomes a rent. But if it is just a non-refundable deposit or a refundable deposit, then you have to see what is the nature of that thing. But if it is in the nature of a rent, then obviously it becomes a rent, and tax applications will come. So you have to understand the contract. So kindly, whoever is a practitioner, please refer to the lease agreement very carefully, and whether the definition covers the rent or not, this type of deposits. Yeah. Next.
Parking lot provided by corporation and collection of fees for the same. Is GST applicable on this?
I see. Basically, this is a question, because if you look at the Article 243G and 243W, parking services are not very specifically mentioned there. But if you look at the wider definition of urban planning or public amenities, because public amenities and public services include parking lots. So obviously one can interpret that this parking services also is a part of the services provided under Article 243W or G. So obviously in that way the interpretation may happen that services for a for a parking will also carry that exemption. But again, whoever is a practitioner, please interpret the law very carefully and the articles that I have mentioned, because this may be covered, but better if required, one can go to an advanced ruling and get an advanced ruling from the authority of advanced ruling, get a opinion on that. So that would be better.
Next question is, sir, as a chartered accountant, we are giving services in updating accounts, filing TDS, GST returns, etc., which covers all the services under section 243W and also the taxable services of renting services. Whether our fees received from corporation is exempt under GST?
sir, I don't know who made this question. I have also the same question. Now I am also providing services. Now this is an issue. Now, in fact, I went to an advanced ruling. Now you can type out my name in a Google and go for an advanced ruling authority order. I filed it in the West Bengal Advanced Ruling Authority. Now there I said that I am providing a particular services under Article 243W and G. So whether I am eligible for this exemption or not, the advanced ruling allowed me this exemption. Now the question comes, as a chartered accountant who is accounting for all these services, now whether he or she is also eligible for this exemption or not. Now on an argument sake, I would say yes. On a different level, I don't know what I should say. But again, I would advise that if such debates are there or doubts are there in our mind, it's not very difficult to go to the advanced ruling. So one should approach the authority for advanced ruling. Please make out a case before them. They will definitely, they will give an order, and that order would be very, very much useful for everyone. But though, as I understand, advanced ruling authority orders are only applicable for that person who is applying. But again, at least you can refer that advanced ruling order in a subsequent case also. So in this case of doubts, please go. But on an argument sake, I would say yes. This exemption is eligible. You are eligible because you are providing the advisory services for all these functions. So you can't avoid this. Next.
Can MC deduct TCS?
MC means municipal corporation.
Municipal corporation, yes, sir.
TCS, which TCS? GST TCS or income tax TCS?
Only TCS is mentioned here,
no,
sir.
TCS. If it is a GST TCS, as I know, GST TCS are not allowed by the local authorities to deduct. So tax collection source is not there. But again, if it is for the income tax TCS, then please refer the relevant section whether TCS are applicable or not. Please refer to the relevant sections whether it covers any person or not. If it is any person, then obviously local authority is supposed to deduct its TCS also.
Okay. That's all with the questions, sir. Thank you very much, sir. We had a very constructive deliberation on taxation matters from government's perspective. Thank you, sir, for great presentation and creating awareness on the topic. It was a great pleasure to listen to you. I'm also thankful to all the viewers of the VCM for making it a great success. I would like to mention here that as a partner in nation building, ICAI through its Committee on Public and Government Financial Management is striving to create assistance and striving to assist central and state governments, including local bodies in India, in improvement of their financial reporting and management by various means, such as by organizing interactions and knowledge sharing exercises with the government organs, formulating accounting standards for local bodies, providing technical inputs on government accounting standard related matters to the Government Accounting Standards Advisory Board in India and internationally, on the documents of the IPSAS, building capacity of the finance officials of various tiers of government in India by organizing workshop, training programs and developing e-training modules. The committee has recently launched its portal cpegfm.icai.org, which provides one-stop repository of all the relevant to public and government financial management to enhance its impactful reach amongst the members, government officials and other stakeholders. With this, I am thankful to all for joining today's session and request you all to join the second session in this series, which is scheduled on 29th of July. Thank you very much.
Thank you, Shivani.
Thank you, sir.
Thank you.